Welcome to a special episode of well, actually, it's not even an episode. That's fine. Today we're joined by... Oh, actually, I didn't get how to say your name. How do I say your name?
Oh, Ale like Alessandro, but yeah.
Ale, okay. Well, fantastic. Good to meet you, Ale. Now, what is your role over at Brahma?
I'm one of the co-founders. I'm more on the product side, yeah.
So today you're joined by one of the co-founders of Brahma, who's named Ali. Thank you so much for joining us. If you guys don't know, Brahma is it like a huge tech stack that's like building this card infrastructure for money markets? Or how would you describe what Brahma is at its core?
I would say Brahma is an orchestration protocol. So what we take care of doing is basically provisioning anything from the user account all the way to settling the execution for transactions. So you can describe a logic that you would like to be automatically executed for users. It could be managing positions. It could be settling card payments from on-chain positions. And essentially, Brahma connects it all. And I would say cards are the first step into real-world payments connected to on-chain positions. But there would be other modules of real-world payments. So on-ramp, off-ramp, and normal.
The first thing made a lot of sense, I think. So orchestration layer for on-chain payments and like off-chain settlement. Is that kind of right, in the right direction?
Exactly. Connecting both on-chain finance to like traditional payments and real-world finance, yeah.
Which is why there's this Swipe Out Fund, which is like the card layer built on top of Morpho and Aave and Felix. But really, you can do more than that. So I know I'm getting, putting the cart before the horse, but what else do you guys anticipate doing in the future?
I mean, we can do anything from purely on-chain settlements. So like, for example, we were just talking about Felix before, or Morpho, we built an agent there for both that do different things: yield optimization, interest rate management. So anything that requires you to automate things over time in a secure way, straight from your account. Like you don't need to deposit into a vault infrastructure. So Brahma can directly orchestrate from a user account with very scope permissions. And then you can add cards, Swipe being the first example, with the possibility to, for example, auto borrow against your collateral as you spend. So in real time. So think about any real-time execution logic or workflow, both only on-chain plus off-chain, and soon even off-chain to on-chain, as you can see with the card. You're spending off-chain, you're tapping your card, and we are triggering an on-chain workflow to settle your payment with Visa in real time. So any workflow can be executed. And the builders can build it without smart contracts, actually. They're expressing a logic, which then Brahma will take care of orchestrating from the account to the settlement. I mean, relaying the transaction and taking care of the gas and all of the complexity there.
Okay, there are so many questions now. I thought it was going to be a simple answer, and now my mind is racing. So no, this is really good. So you said Morpho, and immediately my brain went to lend aggregation, where you effectively normalize lending rates between various different Morpho vaults. Euler can do the same thing. So they have various different operators that are doing different markets, and some meaningful way of automating that. And we've seen Summerfy do this. I think Superform does this. Gauntlet Alpha is doing this. Are you guys essentially offering a tech stack that allows some entity to come in and then create like automated products in DeFi?
Absolutely. We literally offer a very plug and play SDK that any builder and developer can express an automation logic on, and they can add any trigger for an automation, an off-chain signal, an on-chain signal. It could be an agent, an LLM. We have like live versions of each of them. And we take care again of the complexity which involves in keeping track of the signal, keeping track of the status of users' accounts that signed up to your application, and giving them these accounts when they sign up. And then the execution. So if you have 10,000 users that are subscribed to your yield optimizing agent, actually we're performing all of those transactions and we're orchestrating them. And that includes all of the execution and the settlement. So yes.
So question, this is probably not what you're going to talk about, but I'm so interested. How much are you guys involved with the ideation of these strategies? So like, do you guys also work directly with developers to help them conceptualize the strategies, to like put them into play, or what has been your role so far?
I would say both. Like sometimes we want to showcase something, like take Swipe. We just launched Brahma cards. We built it. They literally just launched. And the first showcase was built in collaboration with Euler, so together. But now we have other cards where the logic is fully written by the partner, the client, and we only power the settlement and know everything that revolves around the cards, making sure that transactions are authorized when the actual balance is there on chain, settling it at just in time. So the builder can come and say, hey, I want my card back by, this type of yielding position, and I want to withdraw just in time when you spend. They write the logic of how that should work. The solving of it should work, kind of. But Brahma runs the whole infrastructure for it. So they don't have to worry about, hey, I am approving a payment on a card that doesn't have that balance, or the transaction wasn't settled on chain correctly. Brahma does all of that, including cross-chain flows.
Okay, well, let's actually talk about that, because the Euler Swipe collaboration is fascinating to me. Effectively, as far as I understand, and correct me where I'm wrong, what you can do is you can take collateral onto Euler, and in some cases, this can be like yield-bearing collaterals, and then somehow interact with Swipe in such a way that that collateral is now spendable. Or, I mean, you could borrow against it through Euler and then spend the borrowed USDC off-chain using a card. Now, do you guys whitelist certain collaterals and not others? Is there an LTV that's maxed out? Is that all set by Euler, or how does all this work?
Generally speaking, it's on the Euler side, because we don't ask you, especially in this iteration, which is very crypto user focused. We don't ask you to deposit the collateral anywhere. You literally connect your wallet where you have an Euler position, and then you can choose how much of your position is usable. I can actually show you on my screen if you prefer.
Yeah.
Let me do that. Let me just try share. Let me know when you see my screen.
I see it now.
Cool. All right. So just as an example, this is obviously as an onboarded user, but I connected my wallet. So any EOA, okay? You have the position there on Euler. If I actually go on Euler as well, just to show you, I will have my position there, okay? So you open
you
whatever.
Multiple wallets. You can connect any wallet that you want to this account.
Today, one wallet is tied to one KYC and one card. Sure. But down the line, exactly what you said, like you could connect multiple wallets, you could switch between them. And now we're going into multi-chain, as I was telling you, still under wraps, but therefore you would be able to choose which position on which chain. So if I am connected to Base, right, and I have my portfolio, I'll just show you. I have, in this case, a sub-account, an Euler sub-account that was created when I delegated part of my position to Swipe. I could have like 10 collaterals in different vaults. I can choose which collateral I want to give and which amount. I don't have to approve everything. We don't do any unlimited approval. So right here, if I go into my borrow mode, you can see that I approved to stake TIF to my Swipe.
Yep.
Okay. If now I want to add another market and another asset, I can just click on add collateral. I deposit that asset. Let's say I deposited RETH or CBETH. Now it will automatically show here, be detected. I can select it and I can add it with a signature. I approve that specific amount and collateral. Today, we started with base market vaults, but down the line, we expand this. And as you said, how do we aggregation of lending rates? Down the line, we will also have our own market in order to make sure that we can provide a better experience. But to start is Euler-based markets, the collaterals you want, and you come with your own wallet. You don't deposit the assets anywhere. There's no proxy contract. There's no vault. At the time of the execution with your card, you gave a certain credit line with the LTV available on your assets. I have an available limit of $289, and I already spent 58 USDC of that with a health factor up here. And you can see my sub account is what I showed you on Euler. And then when I transact, literally in real time, I can see the on-chain transaction that is related to this spend. It literally happens in real time as I spend, and we're taking basically the collateral, the DApp token, and we're borrowing USDC against your collateral. Yep. Then you can go whenever you want. For today, for the first release, you can view your position. And as you can see, I have my LTV here. I have my same L factor, and the amount I borrowed is here. So you have full control. It's your wallet. If you want to repay it, if you want to add collateral, remove collateral, it's all up to you. But I just want to stress that this can be an experience that you can build in any way. A developer can choose to make a mobile app with an embedded wallet that does everything from the stable to the position, and it will auto repay. So there are many different logical automation you can imagine that we can add to this to improve it. Okay,
so I think I understand, and this is so cool. So basically, you go on to Swipe, you've connected to Euler, you have in this case one wallet, but maybe in the future multiple wallets. You can then whitelist the different collaterals you have on Euler to be added to Swipe as spend fromable positions. Do you set the available limit, or is the available limit automatically generated by Euler's LTV?
Euler, yes.
Okay, perfect. So it tells you sort of how much you can spend based off of the collateral assets you whitelisted, And do you whitelist a certain amount of those collateral, or do you just whitelist the collateral?
No, you can whitelist also the amount. Yeah, you can change it over time. Exactly.
Oh wow, okay. I don't know. Yeah, I probably never use that feature. We want to throw the whole chunk out there, and then other question. So once you've done that, you can also still borrow on Euler directly if you want to. It just changes your available limit on Swipe, right?
Absolutely, because you actually have a different like account, correct? You could have like a sub account on Euler and then have a normal account. So literally when you use Swipe with Euler, because Euler has a neat sub account feature, we open a sub account. So you can have completely different, let's say, positions if you want, or you can keep using this sub account and obviously add, up to you.
Yeah, sub accounts are actually a lot cooler than I think people give them credit for. There's a couple of the protocols that I like that are going with this method because of the success of Euler's fees. Okay, so one of the other things here is you can add multiple collaterals. For in this case, you have what is that?
WETH and stake
ETH and ETH. Yeah. WETH, yeah. I don't know why do we call it WETH if it's ETH?
Yeah, I'm not sure. I say WETH.
Yeah, so we can all wrap Ether by ETH, WETH, and it kind of makes more sense. But
yeah,
who knows? People are strange. Arrow. So okay, I understand the product. Now the next thing is you were saying that this tech stack can do more. So it's not just that, like right now, it's collateral on Euler, these sub-accounts you can spend against them. Well, first question, how bad are the fees?
How about the fees? So we take a settlement fee every time that we settle essentially crypto to stables, etc. So we take a 50 bips on the whole execution, whether it's swapping, borrowing, and bridging involved. And then the rest of the fees are taken by the issuer of the card. So we're optimizing this. It depends where you are. If you're actually USD spender, the fees are great. There's basically no fee because you have no Forex fee. Right. They're USD based card. Yep. If you're a European like me, right now the fees are not good just because you have an extra.
Right. Yeah, I mean,
Forex
card has the same issue.
But there's no extra fee. And at the end, like you literally like we have to calculate it and we have to like, as you said, you can add any logic. Next is yielding logic. So imagine that instead of you off ramping a chunk every month, off-ramping it through whatever, let's say the SEX, which has a good off-ramp rate, then you're losing yield on that collateral that you're parking on a debit card.
That's exactly right.
Here you're not losing anything. You're actually staying like 100% invested up to the moment that you swipe and spend that $4 of coffee or...
And that's just an on-chain debt. It's not like, it's not really like you off-ramp.
Sorry. Yeah, I meant if you do the yield flow that we're adding now, you're in a yielding position and you want to withdraw your stable only as you spend it. Correct? So like you asked about lending rate. Now we're going to add debit flows to this, meaning like yield flows. So imagine that you can set the rate at which you want to borrow against your WBTC or CBBTC. And then you want to set, hey, if the rate is higher, I want to use my stables in my yielding position instead. And we are pulling your stable in real time. And this is already like being built with a team. And you can add any type of yield and credit logic and mix them if it makes sense. You could also rebalance the portfolio and auto repay with the yield. Like, it's all logic.
Question here. Does this mean that you can spend yield-bearing stables, or is that what you're suggesting, or is it like spending a yield-bearing lend position? So like, you know, you're lending USDC on Euler, it's maybe generating 6 to 7%, and then you spend that, or is it you're saying you have this yield-bearing stablecoin, maybe it's Athena USD or something, and you can spend that directly?
I mean, both. At the end, Brahma is settling in real time against stables that are accepted by Visa in this case, which is USDC, USDT. So as long as there's no big slippage and there's good liquidity, we could settle from any yield-bearing stable. And most importantly, we can prepare a float. Like Brahma at the end acts as a solver in the back end. We have a float across the chains that we control essentially. So we can do many things like pre-funding a certain float, making sure that we settle your stable to USDC on that chain or to whatever stable we feel is good.
And you guys do solving either like if there is any instant redemption for some of these yield-bearing stablecoins, you guys could solve for that route.
Exactly. So literally we're talking about even positions that have a queue of withdrawal with some teams. Right. And we're preparing a way to be able to solve from a small float that they keep liquid. And again, you can retop it up. You can do a lot of things. Again, anything can be automated if it makes sense. So anything you can do on chain in a call, it can be even
back. It can be done. Could be done.
It can be, and I'm saying it's not very hard because you're not building contracts to do this settlement. It's sort of a dynamic logic that Brahma can execute. So it's like solving essentially. So we can plug in other solvers in the system, which we're planning to do, kind of open it so people can commit their own logic, or you work with us, or you work with your team, and then we take care of all the complexities for the card. And if it's only on chain, there's no complexity, meaning there's not the extra card bit, obviously. Depends on what you want.
Question. So, I know you guys are on base now. I think, EtherFi's card went on to Scroll. So it's like there's this obvious target for these cards to go on places where it's very cheap to, utilize the underlying option. And that makes sense because you don't want to be paying $16 to go buy coffee for ETFs or whatever it might be. Where are you guys so you're on base. Is there anywhere else that you guys are at now?
Today on base with the cards, with not the cards, but the on-chain settlement, we're on HyperEVM, we're on Arbitrum, we're on Ethereum, we're on many chains. But I would say that the card is, HyperEVM is the next spot for us. And to be honest, it's where the client and the partner with a cool use case is, correct? Like we're not a closed system or a B2C only product where we build and we offer. We're an actual protocol that, you can add logic to. So at the end, we will also make it very easy for other people to add other chains, if it makes sense. We could settle from Solana if it makes sense. We're actually talking to teams there as well. So it can be done. It's not
to utilize they also ported Syrup USDC. So it's kind of funny. It would be like an EVM product on Solana that you guys spend against. The Syrup USDC, the 7% APR.
And also we're talking about tokenized stocks, the deepest liquidity for tokenized stocks right now is on Solana, for example. Hey, can we borrow against your tokenized stocks?
Oh, man. So me and my buddy were talking about this recently, which was there were a lot of people say, oh, these tokenized stocks just to pay such a premium to buy them. And then, I've looked on chain, I was like, they're actually trading at a discount right now. You're getting more of the stock if you wanted to buy these. So, it's kind of.
And if you could borrow against it and draw credit, in a programmatic way, that's the reason. So my point is anything programmatic on chain can be done. And we link it to the off-chain payment and we take care of the complexity for the dev of, hey, I have to bridge, I have to figure out how to settle this, how to approve a transaction with a certain delay, max delay from Visa. We do all of that.
Yeah. I mean, imagine getting the S&P 500 with maybe 1 or 2% APR on top of that, and then being able to spend against it. That would be awesome.
Yes, and even auto purchase and auto rebalance portfolios while you have the yielding and credit position with a card connected to it. We can do that, and I think.
Well, so let me ask you about that. That sounds like something that the average user wouldn't be doing, but that someone who is sort of abstracting this away for a user and offering it as a service would be doing. And so is that kind of the profile of is what you're thinking, or am I?
I would say today's partner are crypto native companies that are trying to connect to an off-chain spending for loyalty plus verticalizing. But down the line, the real also businesses we're talking to are fintech businesses, Web2, that want to plug positions of certain types, on-chain positions, to their product for either yield or credit or other reasons, or settlement of stables, whatever. We have everything from provisioning a user account that can execute transactions. So it means no recurring signatures, no bother for the user, no gas. We take care of all of that. And we settle the positions and the transactions as they need to happen. So theoretically, we can become really connecting the on-chain and off-chain stack, as I said. Today, we serve on-chain to off-chain. We can also serve off-chain to on-chain for businesses, if it makes sense.
Yes. So I just want to highlight a few things here. This is awesome. I need to go with these cards. Oh, well, I mean, question. One of my problems is that I'm an Android user. Don't hate me for everyone out there who uses iPhone. I need to also use an iPhone for, just additional operation security. My wallet pay wasn't working. So, sometimes I need to rely on a physical card. Will you guys have physical cards in the future?
Yes. I mean, it's expensive to have physical cards and it's a bit of a headache. It depends on the partner and it depends on the need. So far, I would say virtual cards really solve 90% of the needs. I don't know how many times I don't pull out the physical card anymore, but I can understand that
that one does.
I can understand there are some edge cases. So we can, in theory, do we want in practice compared to other things? Maybe not, but it can be done.
I mean, it's not an obvious way to steal anything, except for the thing oh, look at my cool card. It's marketing, man. It's a marketing budget.
You're right. Actually, like one of the partners, literally before we did the card, they made an access pass that they gave it. This is super cool. Hyperbit, shout out. So yeah.
Oh, actually,
right. That's
your point. I can nerd out about Hyperbit. I know it's not what we're talking, but I've done a lot of math on Hyperbit, and I'm farming that airdrop over there. But that's besides the 51 1,000 total points. What does that mean? That was the same amount of points that Liquid had. Okay, so anyways, so I'm looking at Euler. I'm seeing on base chain, YoUSD, max ROE here 58%. But for those who don't know, what that means is if you were to leverage this 10x, you're going to get a 58% net APR. But for the people using the card, what they should think of is as anything that's green means that if you're borrowing against it, you're actually getting, hey, like you're still, or rather, your collateral is growing faster than the debt of your interest rate. Or as faster than your debt would be growing, purely based on interest rate. So there's let's just say you're collateralizing YoUSD. It has an intrinsic APY of 12.65%, and you're only paying 7.52%. That means like if you were just holding this month over month, let's just say you put $100,000 in there, you're getting $1,000 a month from 12.6% APR. That means you could spend that $1,000 or a portion of that and still have your principal protected. So it's like a savings account that you can spend from. It's actually generating more money than you're spending. You can keep that position there. So that was the benefit that you were talking about, is like just being able to keep this position open. It's generating yield for you. Maybe you're holding it for multiple years for tax purposes or whatever. You don't want to pay income tax or who knows what. But you can utilize the value of that with that USDC.
Yes, and even have on top of it, even have parallel yield position on another asset that requires some certain management, correct? Like claiming some rewards and doing something with it or other things, and deciding when to spend debt and when to spend borrow. And on top of it, for markets, we started only with base markets, but imagine that the same collateral can be used on 5.
Spending debt versus spending borrow, because this is throwing me off.
Yeah, I mean, you supply this asset and you want to borrow USDC against it as you spend, correct? And you're obviously paying an interest rate. But maybe you say, hey, the interest rate is high. I'd rather spend from my stable balance of USDC, which is invested in this vault or in this other yielding position on another protocol. And we can withdraw in real time. We only withdraw in real time the amount you need to pay for that. And the rest stays yielding. Make sense?
And you can also set a logic where it automatically pulls from whatever.
Yes, exactly. And for the lending part, today we start only with the Euler-based markets, but as we add more markets, we also can add a logic that will automatically rebalance your supply position to the market that makes the most sense, correct? So that's also totally possible if it makes sense. And then you borrow from it.
Because there's also a protocol called War Markets that my brain went right here. Like, oh, you guys know more markets too? That's it. Yeah. Totally different protocol.
No, totally.
But actually, they kind of copied the Euler design with curation. Don't need to get into the weed there. I mean, if there's a word, there's some protocol with that word as the title. Which is, good thing that DeFi is expanding. Now, question about these PTs. So, I think I understand, but let's say you want to utilize, Pendle is like 30% of Morpho's TVL. Pendle is a super massive protocol. Zero coupon bonds are obviously very interesting assets for collateral, but they have an expiry. Does that matter at all in being able to spend the value of them?
More than the spending value, I guess, like, is there any management that needs to be required for rollover of that position or some other things? We could handle that within Brahma if it makes sense. So
you could do rollover. I mean, I think most people are luckily this cycle has kind of like taught people what Pendle is, how interest rate swapping works to some extent. I mean, mostly it's been points bonanza, but that's also fine. But no, we can. I think you're going to say I need to close my position when the expiry happens. If you open up a new PT and then add that as collateral, and then I think that's not going to be a huge issue. Rolling over would be awesome for LPs, especially. Like if we see LP collateral on Euler, because we saw Pendle LPs have sort of made a break into the money market space. I like those. I don't know if you have looked, but like there's EUSD LPs right now. They can borrow against, and you're getting 50 sats, which are effectively annualizing to 6%. IY, if you kick the discount of one, it doesn't really matter. It's a nice additional 40%.
But it's a nice.
But
yeah.
But
the supporting a collateral, a PT as a collateral on like Euler or other is totally doable. I mean, and it's just a matter of us basically.
Does that mean that any collateral is already usable on Swipe, or is it a set of whitelisted collaterals?
Today, there's a set of whitelisted collateral that you see when you add, and it's mostly like ETH derivatives, BTC. And we have Error and SUSDS and USDS and EuroC. So but we will add more. This was just the first release that we went live with. But we will add more markets. Then the logic of how to rebalance between markets And then also repayment, when you asked about PT, at the end, you are choosing today how to repay your position, when to do it. But we will also add some level of auto repayment logic, especially if you have other collateral, which is in a yielding position, which is separate from your lending market, correct? And maybe you want to connect the two. So,
well, the cool thing here is that, like, so, you know, there are these other cards that kind of offer a semi-similar service, but you have to repay your loan through their front end. Here, I mean, couldn't you just like hop onto Euler and then repay your loan? And then
it's all up.
More to borrow.
Yeah, it's all up to you on Euler. Today, we literally didn't. We started with only Euler because it's for users of these lending protocols. Now we can add the in-app flow to like repay, auto repay, and especially when you go mobile and you want to simplify things. But for now, it's literally, as you said, it's your wallet, it's your lending position on Euler. You go and manage it at the end how you want. Correct. The only important thing is, imagine you cut off the loan because you withdraw your collateral on Euler. Swipe will now show zero available limit. You try to pay. Obviously, payments won't go through if you don't have enough to borrow because of the LTV or whatever. But that's literally what it is. It's like purely self-custodial. And my point is, it's very different from some other companies where we're not building a product which would then manually add things to or have sort of a gating. This is a primitive kinda with an SDK, and we're opening it up so that other protocols can just plug into it. And then what you asked, will some cards be only for certain logic and protocols? Yes, if they want that and they want to just make a white label card. But if you want to keep it open and collaborative, you can literally plug into Swipe. Everybody can, you know, basically use the new module that was added by XYZ protocol on XYZ chain. That's the whole point. You KYC once, you plug multiple wallets soon, and then you use whatever position you want on chain to pay off chain, essentially.
So, you know, I know that Euler is on a lot, if not all, of the major L2s. Do you guys have a clear path towards like which next L2s you guys are going to target for card integration?
Honestly, no, I'm thinking like there's many protocols that we on different chains that we're running POCs with. I would say, I told you HyperEVM has a lot of really cool protocols we're working with. So probably a lot of what we do next is HyperEVM based. We had some requests for like something on Arbitrum, something on Sonic, Berachain. Generally, as I said, like a chain for us is we already have the infra and we do all the settlements. Remember, order flow, all the trades are settled by the protocol. So as long as we can have a good execution speed and quality on that chain, good RPCs, etc., it can happen. And we're already on like 8+ chain with Brahma. Like out of the ones that Euler is on, I'm opening apart from Unichain and Avalanche and BOB, we're like on all the other chains, you know, already in terms of execution systems. So yeah, pretty easy for us to onboard a Berachain or a Sonic protocol or BNB, you know, to settle with the cards.
Why not Avalanche? They're doing the only reason I say this is because they're doing DeFi Summer 2.0 right now. And DeFi Summer 2.0 has a lot of incentives. It would be cool, like, you know, sitting in collateral, it's getting also, you know, wrap AVAX incentives and then be able to spend against it. They also have a lot of yield-bearing stables as collateral on Euler over there.
That's true.
Yeah.
That's true.
Very selfishly, I just want to be able to sit in those by spending against it.
We could, honestly. As I said, it's like purely demand-based. And because now we're doing some co-work on the development side with the teams, because it's really new, like the cards just launched. So we're polishing the SDK, getting feedback. Therefore, we're still spending a good amount of our dev time to basically put things up. So yeah, first the HyperEVM launches, and then we...
No, yeah, I could know about HyperEVM. I saw like you just held up a Hyperbeat thing. Are you guys going to work with Hyperbeat directly anyway? Or are you already? Is that what that is?
Yeah, the Hyperbeat card will be powered by Brahma as well. Yeah, we're working with the team. Yes.
Hyperbeat cards, they don't have a money market as far as I know. So how are you guys spending against that? Or are they just spending their assets directly?
You're spending yielding assets in the vaults directly, but they also want to build some other flows that involve credit. But for now, you know, the first step could be that yielding collateral and auto withdraw and spend it essentially.
Yeah, I mean, I forget what it's called, but they have the USDT vault that was doing like 20% APR for the last couple of weeks. Even like spending that directly is fine. You know, you're paying no interest rate. Yeah, and you're just getting 20% APR. And when you want to spend it, go ahead. And your collateral's
and as I said,
off-board that.
Exactly. And the fees and the fact that also off-ramping from HyperEVM or certain chain is more challenging than some others. So yeah, that's all taken care of for you, essentially. Yeah.
So question to you. You've explained the card sort of stack and who the partners are and sort of the direction with the overarching like Brahma orchestration layer. Where do you guys anticipate sort of like heading in the next year or so?
I would say that our thesis was always revolving around powering on-chain execution and orchestration, and then attaching it eventually to off-chain, which we're starting to do with the cards. It could also be in 2 years that a lot of what we do comes from distribution from Web2 parties that then connect into crypto, so almost the reverse. But irrespectively, we're kind of in the middle there, and we have connectors to, well, we live on-chain obviously as a protocol, and we have connectors to off-chain, starting with cards, on-ramp, off-ramp, bank, and let's say stablecoin to bank payments. So you can basically build a programmable logic, an app. You're a dev. You're a fintech dev or you're a crypto dev. You can build a programmable app from scratch without writing smart contracts or custom contracts, like very easy, very Web2 friendly, that does things for users and can onboard users from day one. That's the point. Like all the POCs we're doing on the cards, all the POCs we're doing on some other connectors that are coming up apart from credit cards, are to figure out where the connection between on-chain and off-chain makes the most sense to generate value for the users and stickiness. And, cards came out of demand from our existing protocols that use us for on-chain orchestration. And they said, hey, I want to launch a card. What if? And we said, hey, should Brahma actually support launching of cards and settlement? And then we say, hey, we have the whole settlement. We have the whole complex part. Now find a partner, issue a card, and connect it to settle with Brahma. And it was really quick to do for us. And yeah, so I would say we would power a big chunk of on-chain protocols and their orchestration for users. And then we would power a smaller chunk in 1-2 years, depending on the speed, of fintech businesses, Web2 businesses that use crypto in the backend, whether it's tokenized stocks for an assets portfolio, yielding or credit positions. We could plug any of that on any chain without them having to build any infra.
Yeah, man, my mind is racing. I can also ask about so it sounds like I know, too many questions. There's vault tech you guys could also build. So there's so many vault tech in the space. I think Vault Spy is kind of a narrative now. Everyone is building these new vaults that are effectively abstracting the yield farming away from the end user, giving them some sort of yield on that. Lend aggregators were an obvious example there, but also just what Upshift is doing to some extent. And then Plume has brought out all of these tokenized real world assets. So and credit and basis and T-bill, all this stuff, and just being able to either have rebalancing logic or actual vault logic, integrating with some sort of custodial solution there would be awesome. I don't want to get too far into the weeds here, but I'm gonna give you the last word. What else? What is on the roadmap? What's on your horizon? What is the most exciting stuff happening right now over with Brahma and Swipe?
I would say for Swipe is for us, it was proving that you can make real-time programmable settlement from off-chain to on-chain. Okay, it was I think it's one of the first products doing that, and making it modular, making it very open, adding more chains, adding more logic that then can be composed by other builders on top of it. I think it's really cool. It's again, you're using the composability of crypto for off-chain payment methods. I think that's really, really cool, and can be scaled very, very neatly. And then I am excited as well about working with builders that are abstracting all of the extra crypto part, because Swipe is very crypto native for now on purpose, right? You connect your wallet, you keep your Euler position, you repay on Euler. You were excited about that because you're a crypto power user. I'm excited to work with partners that are also fully abstracting this. Imagine you have, a bridge stablecoin account, like a Stripe account. You just tell the user, hey, deposit money here or use your Apple Pay. They're depositing fiat, and you are programmatically on-ramping that funds or part of them, and you're programmatically adding them into different opportunities based on the risk profile of the user, which is what you said. You have a lot of vaults, you have a lot of abstraction, which is on-chain. Make it fully off-chain compatible, and even program the on-ramping, off-ramping. It's almost like, a normal user has an interactive broker. They deposit part of their salary on interactive broker or their bank, and they have a recurring investment plan. You could do this, but for any composable position on-chain, and Brahma would power end-to-end all of it. And you are not adding a lot of extra security risk compared to having, again, a vault with sort of honeypot, all of the assets in there. We don't work with vaults. We will obviously interface with vaults that you deposit in, but it's your wallet. Right. It's not on a Brahma contract. Does it make sense? We literally orchestrate in real time. You have a permission, sorry to quote Apple or your Android, where you have your permissions given, right? Use my camera only when using this app. Mm-hmm. It's the same for Brahma. You can literally revoke it with your key, whether it's an embedded wallet or not, a Face ID or not. You can revoke it at any time, and then Brahma can't orchestrate shit, or the card can pull anything from your account. So I think that's the future. Very personalized, no one size fit all connection to any on-chain position, and even off-chain settlement programmatically that then devs will cook interesting stuff from, and we will keep cooking stuff like Swipe with partners to like showcase and put it out there for sure. Yeah.
Well, yes, the last part is if people want to start using the card, if they want to start putting, collateral on Euler and then spending it, is there like an invite code thing? Is this gated? How do people go and start doing this?
So we do have an invite code as we keep like getting feedback and improving it. But if you have $100+ of another Euler position on that wallet, which is pretty common, then you can directly connect that wallet and get started. Otherwise, if you have to open your position after you want to check it out, then you ask us for a code on Twitter and we shoot it to you. And we will keep doing this like invite code for the different releases, because we want users that need this to give us some feedback, correct? And so that's the plan. Very easy. You go to swipe.fun, you connect a wallet with $100+, dollar value in other Euler, you try it out, you get a card. And then the benefit is the more integration that come to Swipe, you just connect them to your existing card. You literally have one card that can orchestrate and do things on any chain for you. Again, what you said, Avalanche, whatever, we just have to decide who to speed run first. But very soon it will be fully open, where it's very easy to add modules without us being there, essentially.
Awesome. Well, Ali, thank you so much. You got me hyped up about this. Go check out Euler. Obviously, there's some good yield-bearing collateral. You guys mentioned S2SGS. We're a huge fan of that. I mean, the Spark token and Sky token have been doing pretty well lately, so that's kind of initial tailwinds there. But not get too sidetracked. Ali, thank you so much for your time. Brahma, Swipe, Euler, Hyper EVM now. This is the future of France that we always thought we were awaiting, and now it's here, man. The future is now, old man.
Yes.
Thank you. And for everyone else watching, have a wonderful rest of your day.